Good evening, friends. Welcome to my channel, Nifty Trading in Setup. Friends, what we had discussed the earlier day is that in case the market opens above this point, and we'll wait for 17,850, and after 17,850, we shall take a call with the target of 17,960 and 17,992. Now, had the market opened in and around and broken this would have been definitely would have received it. But the market itself opened gap up and opened at 17,902. So there was when it opens at 17,902, the immediate thought is what? That if I take a call, then what is my reward? 902 and 960 or 992. My reward is 60 to 80 points. And my risk is how much? Again, way down below at 17,807. So not a very good trade. So therefore, if it is opening gap up, then I immediately switch myself and I move to the how to trade in gap up and how to trade in gap down rule, which is there in my playlist. Please go through that. I applied the same rules today. And as per the rule, normally if the first candle is on a 50 is a 50-point candle, then I will follow the low of the candle and on a break of that before 10:30 I will take a put. But this candle that was formed today was only 36 points. So the moment I saw that it's a 36-point candle, therefore I ignored that candle and I waited for the 10:30 bridge to be formed. And at the 10:30, the lowest point was 17,868. Now again, as per the rule, the moment if the market goes up, does not cross the high of the first candle, comes down again 50-60 points, then I shall take a call. So definitely at 11:15 a.m. On a 50 point down, I took a call with a SL of 20 points. My SL got hit. My SL got hit at 11:45. I gave the market my SL, kept quiet. Now at 11:55, if you see, friends, a very cute Chintu formed. It's a reversal hammer. And friends, keep a watch on this type of candles. The moment it forms and it's followed by another sell-off, or if it's green and then followed by another buy, then the movement is quite big. Now, friends, here when it formed Chintu, I at 11:55 a.m. I again took a put with an SL of just 10 points here. Normally, I would have waited for it to come down up to 17,717. But then what happened today was I realized that there is a gap. There was a gap. The market has formed a gap and is coming to fill the gap. So the moment it filled the gap at 1:20 p.m., it filled the gap and a support it took at the next candle, at formed a green candle. I exited and I booked my profits. And after that, if you see, friends, it again went back and touched 17,868 and came back. And again touched the gap border and again went up. So, friends, the market has been quite predictive today. Those who would have traded in the gap up rule and on a rule-based trading without random trading would have made profits, but those who are doing it random would have made losses. Friends, I just want to share you my trading setup also today. So I have this where I have the daily candle and the line chart. Then I also have the weekly candle and weekly line chart. This is just to observe the movement and the pattern. After that, this is my position for selling. Today, the selling did not give me much, around only 2,000 rupees, which is around a percentile. I have my Bank Nifty futures, Bank Nifty, the price movement. This is futures, price plus volume, price movement. This is only, now this price movement is basically to observe. I don't trade in Bank Nifty, so I just get it for observation. Then you have Nifty future, volume chart, Nifty current spot, and then I have Nifty where I keep my trading done. Then I also keep a track on the line basis to see how the chart is forming for Nifty and Bank Nifty on a 5-minute candle, because I'm trading on a 5-minute candle. For subsequent to that, I have the OI pulse where I look into the trending OI, and specifically I look into the OI statistics and the change in the cumulative OI and the change in the cumulative OI on a 15-minute basis to decide, to understand where the market is moving and how the market is moving. I also look into the option chain, but option chain here I modify this into 15-minute candle, sorry, into 15-minute chart, and I also bring in delta, so that when I buy, I know at what delta I'm buying, and for every movement in Nifty, how much the option is going to move. Then I have the option chart, then I have the option chart for Nifty, and also the bar chart for the movements. So that's what the friends. Now let's come to what can happen on Monday, the 12th of September. So friends, the market has given a very clear direction. Very, very clear direction is given. Between 17,868 and 17,885, it's a no trading zone. Please do not trade here. Okay. So before I go to that, I also want to show you my P&L today. So it was a loss on the CE, which I said, and it was a profit on the PE. So I took a 17,600 CE, and I took a, and then after I made a loss there, then I took a 18,000 PE, and that recovered my profits and also gave me some profits. So that's on the profitability part of it. Now, friends, coming back to the Monday analysis, Monday between 17,868 and 17,785, this zone, do not trade. Okay. Now, if the market opens flat and breaks 17,868, wait, I shall take a call, and I will wait for my first target of 17,970 and 17,992. When I take this particular position, I'm going to keep an SL of 40 points, which comes to around 17,829. Now at 17,970 and 17,992, I shall take a put, provided there is a reversal chin to happening. Now, if a market takes resistance from these 2 points, then I'll wait. I'll wait for it to come down way up to here, up to 17,868 first, and then up to 17,798. And my target would be, my final target will be 17,692. So if it takes a reversal from here, I'll wait for a target of 17,692 on a Monday, because normally Mondays are trending days. Okay. Now, what happens if it opens substantially, if it opens gap up? If it opens gap up in between these two lines, the opening of today and 17,868. In that case, keeping the SL of 17,868, you can take a call. And again, the same logic will apply. Wait for 17,970, 17,992, and from the reversal. Now, friends, if the gap up is substantial, more than 100 points, crossing 18,000, or crossing 17,970, crossing 17,992, then apply the gap up rule. There I cannot give you any targets, because then my targets are already met. The market overnight has taken away my targets, so I'll apply the gap up rule. The trading in gap up rule is given in my playlist. Have a look at it. Now, friends, if the market opens gap down, as I said, I'm neither bearish nor bullish. If the market on the downside, what may happen? So if it opens flat, and it comes down below 17,786. It comes down below 17,786, then take a put. I will take a put with SL of 40 points in index, which is 17,826. So I'll take a put with 17,826 as my SL, and my first target will be 17,692. Now, this has to break. If this breaks, then friends, wait for a long target. I know I'm showing you a number which is quite down below, but once this breaks, then your strategy should be by keeping 17,692 as your SL. Okay. Revised SL. So the first SL would be 17,786 or the 17,826. The first SL will be 17,826. Now, if this breaks, keep the 17,692 as SL and wait for it to come down. At that point of time, do not exit. Either you give the market SL or you take the full rally. Okay. Now, if it opens gap down, and in between this gap, then also what you do is, then the nearest resistance point is 17,692. Keeping the SL at 17,692 as the nearest resistance point. Take a put and wait for it to come down. If it opens gap down for more than 100 points, friends, then apply the gap down rule. Then whatever I said will not apply, because the market overnight has already taken my profits. Okay. That's all from my side. Friends, please like my channel. I don't charge anybody anything. For the webinars that I do, I don't charge anybody anything. My only remuneration is the like that you all do. So please kindly like the channel, subscribe the channel, and also share it with your friends. That's all from my side, friends. Sayonara, cheers, and bye-bye.